Welcome everybody to our Wednesday night webinar. We are super excited to have you tonight. Tonight is going to be a very interesting topic about asset management. It is super important right now, obviously, with a lot of things happening in the marketplace. So we're going to start off today by talking about our upcoming virtual conference. If you haven't been to one of our virtual conferences before, you are definitely missing out. So it's a full day of learning, networking. It starts at 8:30 in the morning, so you got to get your coffee, goes till 6:30 at night, a whole series of topics. We do take a little bit of break for the lunchtime period, but again, this is a really good way for you to be able to sit at your desk, get a whole pile of different folks that are going to be giving you information. So I'm going to put a link in the chat in a minute here, and you'll be able to join, and you can also scan that QR code. But it is very exciting. I've had a lot of folks that have always, I invite a lot of people to a lot of our events, and everybody says, wow, that was a great day. So thanks for inviting us. We hope that you can join us. Oh, look at there. Dennis says the virtual conference was amazing. Thank you, Dennis. All right, so we're going to go to the next slide. As if we don't have enough things going on at Massive Capital, it's our third, and we're calling them master classes now. Nobody knew what a hackathon is, but forget that. Facebook didn't like hackathon, and we all got blocked on Facebook. If you can imagine, as much as I post, being blocked on Facebook for 6 days, it was like a terrible thing for me to have happen to me. But we have our next master class, and it's actually going to be about the topic we're talking about tonight. We'll go into it a lot deeper. It's about asset management, and we're actually switching venues, and this is going to be done at the Rice University. So you can see we've got some folks here. Now, one of our team members pointed out that his picture is in there on a thing, losing money on your properties. And we want to make sure that you all know that Dennis isn't losing money in our property. He's going to teach us how not to lose money on our properties. But it's kind of funny, the tagline that got created. But again, this is going to be a great event. This is in Houston. And for all of you that have missed our events, we're actually going to be running them again in the Dallas market area. But it's a super exciting event. Dennis, you can see in the bottom left-hand corner, who said our other virtual one, he actually joined up with our mastermind program. So we're super excited to have him part of our program now. So thank you for that. All right, so Wednesday, Massive Masters case study. So this is educational. So what we're doing here is we are telling you what Massive Capital thinks, believes, and is doing and has learned. Okay, just like everybody else in the marketplace, we've been shifting, we've been making adjustments. So we think that it's super important for us to tell you, but we are not financial advisors, we are not accountants, and we are not your legal advice. So you always need to be sure that you get your own professional advice before making any investments. So a little bit, tonight, we're going to talk a little bit about Massive Capital. We're going to offer how we add value to investors and partners. Tonight, we're talking a little bit about asset management, and we're referring to as the corporate framework versus the usual practice in multifamily. We'll always have time for Q&A. And on the front back there, we have John D. Rockefeller again. The way to make money is to buy when blood is running in the streets. And I've even seen this one said when it's your own blood as well. So it's super important. So a little bit about Massive Capital. We're a vertically integrated real estate company. We also specialize in ground up construction for retail, flex space, industrial, and mixed use multifamily. We are an owner operator for value add multifamily. You can see we're fairly Texas centric. We have assets in Dallas, San Antonio, Houston. We also have assets in Denver, North Carolina, and Atlanta, Georgia. The Phoenix and Tampa, those are locations that we've been looking at for our retail. So on the left-hand side, we have Equity Fund. We have a brokerage. The brokerage is for the triple net retail. We have property management on the triple net retail, development, construction. We have a tech company. And then as we mentioned earlier, we have the massive mastermind. Across the bottom, you can see Realty One has about 290 million. And then Massive Capital itself has just over 200 million in assets. We have just under 1,400 units. We have our X-Space development, which, by the way, next week, they're supposed to be starting construction. I am super excited to see that building come up. It's going to be gorgeous. They've finalized all the designs. You know, it was crazy. They had to pull 88 individual permits for them to get the master building permit. I've never seen anything like that. So they have everything aligned. We're all ready to go. It's super excited. I can't wait to have that one be built. So this is the team behind the team. So you can see we continue to grow at Massive Capital. So we have our full investor relations team. We have an education team now. We have a sales team. We have accounting, asset management, education, acquisitions. And then, of course, in the bottom, we have a lot of the folks from Realty One. Ramesh always sort of gets stuck in the Realty One guys. I don't quite know what happens with him, but he's our director of technology. Super impressive things that they're building on the technology side. So then our partners across the top, we have Shirar. We got him a good headset for tonight. Last week, some people said didn't work, so I think he's gone back to old school. We have Sanjay and then Mike Bailey. Mike's actually at another event in Houston. He's presenting at a local meetup. So we're super excited for that. And then across the bottom, we have our Realty One partners, Bo, Pat, and Alexis. Super excited to be working with them. So in 22 and 23, we closed on 15 syndications. We have some new construction that's going to be happening in Houston. We're finalizing the contracts right now. We have LOIs pending in Dallas, San Antonio, and 3 in Houston. And we're about 90% subscribed on our Horizon opportunity. We've switched out the picture here. And the reason we switched out the picture here, I want to talk about the team behind the team. Right? It takes a team to run an asset. We're going to talk a lot about property management today. And so what we wanted to do was say, this isn't even all of us, but this was when we were all together in Houston. And so this is a 506C opportunity. It's an amazing opportunity. Reach out to anyone on the investor relations team and we'd be happy to help you. I'm going to put a link in the chat that you can be able to book a call with anyone on the investor relations team. Also want to make sure that everybody knows, and I'll put a link in the chat, all of our Zooms are uploaded into our YouTube channel. So if you came late, you miss anything, don't worry. We've got you covered. All right, put your seatbelts on. We're ready to roll. Oh, wait, I'm sorry. There's one more piece. Do you want to do this piece or you want me to?
Fine, I can take it from here. Thank you so much, Trevor. Really appreciate it. Before I get started, one thing, we are really excited for our May 18th events that's coming up in Rice. That's the first time we are partnering with the Rice Alumni Board and also Lily Startup Hub from the Rice campus. They gave us the space and we're really honored to have it. If you're in Houston, come join us. We're expecting about 70 to 80 people. So we'll talk about the asset management, both what happens and from outside, what happens from inside. We'll open the book. So we'll respect the style that we are building on the first two. We're going to show exactly what happens behind the curtain, right? Good, bad, or ugly. And the agenda should be published sometime. By the time we come back here next Wednesday, we should be able to give an agenda. And also for the May 10th, we blended in corporate structure or larger corporation. We have about 3 partners coming in and speaking from their perspective. And then we have some of those well-known speakers who'll be coming in the afternoon, that in between we have some tools and fun exercise. So please join. I would love to have you. Last time we had 350 people signed, 360-ish folks came about, and we had a really good interaction throughout the day. All right, so how do we partner? So Massive side, we buy land. We do a straight up land acquisition. Also, we partner with landowners, 2 to 40 acres, commercial acres with road frontage. We'll provide a done for you service for landowners. You come in with the land, and then we come in with the debt and the construction and the leasing on a Class A location. We underwrite quite a bit, and if it is your land, come to us, we'll strike a price, we'll do a JV. And that's that. If it is on market, we're not looking at it today because the land price and the debt is tough. And by the time we put a structure together, it puts a weight on the land price. So the best way is staying into the deal and create the value as you go. Second one, of course, as usual, we buy value add multifamily, new acquisitions. We are extremely active for distress and off-market assets. When I say distress, it's not quite full typical definition of distress. It has a sign of stress, whatever the stress is, operational stress, financial stress, mostly financial stress at this point in time. What we're looking for right now, 1980 plus or 1980s or newer, 150 units or more, pitch roof and no coastal area. We do not go Corpus Christi, Baytown, those kind of areas, so no coastal line, but we are pushing upwards and north as much as we can. Asset advisory, we have our own software that will show, we are going to show you a demo, what we do. That's so we can come into the asset just to provide the asset advisory if needed. And we can take over an asset as fast as 4 days. And we'll, the demo is going to be there tonight. The last one is debt and loan guarantor. We're happy to do a balance sheet as we go. And yes, we have one property under contract that we're keeping. So it's that's under contract, officially under contract, went under contract, I think 3 days ago. So we are going through the process of loan assumption, brand new loan with Arbor at this point in time. And the last but not the least, we have the education. We call it Massive Masters. So as you see it, ask and reach out to any of the investor relations as you go. Okay. All right. So let's get into the asset management. So on the asset management, before we get in, a couple of things. And asset management to us, it's a broad thing. And it goes from the revenue to cost to OPEX or operating expense to financial expense to the CapEx and then the net result. And that's 1, 2, 3 days worth of sessions. So I took one line item and we're going to go through an exercise of how we take a look at it and we go. All right, so just remember, it's all about the cash. We're supposed to have a survey. So, okay, here we go. So thank you. So if you would take about, I would say 10 seconds, if you could fill out the survey, we'll really appreciate it. What we do, we take on your feedback and we share the feedback down the way at the end of the session. We also optimize our webinar topics based on the feedback that you have. So I would really appreciate it if you could take that survey and fill that out. So let's take about 10 seconds real quick. Then we are going to get into the next one. And as you do the survey, if you have a pen and paper handy, that's going to be good because we'll do some quick back of the envelope calculation as you go. And our thought, our framework of this session was what a typical financial planning and appraisal team does in a corporate world versus what we do in a multifamily and the gap between it versus what it needs to be, right? Okay. All right, Trevor, how is the survey looking? Are you happy with the reply rate?
We're 42. I got to go 45. We're moving. We
got a little bit more, right? We have 93 people, and let's go get into the habit of voicing opinion. We all should have an opinion, and we should express it. That's like a first part of having a conversation, and then we'll do the rest. So, Trevor, is it good enough for me to go to next slide?
Good. Keep going.
Awesome.
Yeah, we're over 50.
Thank you. Beautiful. So, multifamily life cycle. So when we look at the asset management framework, so we need to understand what the longevity of the asset management looks like and what's the process. So we break it down typically in 3 different buckets. First one is always, at least our underwriting perspective, when we underwrite new construction 3 years plus minus a year, and then multifamily, it's 5 years and plus or minus 1 year. And depending on the asset, we can do minus 2 years plus 1 year. So, which is, if you ask us, how do we underwrite? We underwrite 3 to 5 years, which is the standard modeled way of going about the full cycle of the multifamily. You may see 7 years old, 10 years old. We don't do that because 5 years is light years within the real estate. We don't know what happens in 7, what happens in 10. That's too far out, make an assumption into the model. So we tend to stick around with 5, which is not too much, not too less, somewhere in the middle. And we feel comfortable with that. So that's why we do that. So the first session that we talk about is the acquisition. It's the whole part of the acquisition. And second part of the asset management is the debt and equity stack. And the third leg is the asset management. In other way, the way we go about making the acquisition, the way we put the debt and equity structure has tremendous impact on how we are going to manage the asset. So nothing is independent, everything is dependent. One builds up another one, and that's how we go. Right? And today we'll talk about the asset management framework as you go. Question was asked about the Master Masters. Last year we have done, I believe, 17 or 19 partners become GP with us for the first time. Our job is to accelerate the partners' growth by reducing the debt and equity burden. If you are an equity raiser, and if you're running the asset, that's how we are keeping the loan. One of the team came about, they said, hey, we got this property. We did our first deal. This is our second deal, a little bit big enough. Massive, can you help? We said, absolutely. Help you with the liquidity, help you with the debt, provide you some asset advisory with our software, and then you go run the asset. If someone manages a fund, yes, they can go shop around, deal by deal by deal, team by team by team. For us, we have enough deal flow and with the variety of deals, so we can be, a supplier of deals that we go. That puts us in a very good spot because when we raise money on the pref checks or larger checks, we get to say, hey, I'm not looking for your check one time. I'm looking for a programmatic partnership because I will come back to you multiple times. In return, you underwrite our team, underwrite our process, do an audit before we structure a relationship, right? Okay, so the focus area today is asset management. All right, so on the asset management side, as you go through it, what we say, just like the corporate world, right? Every team has a team lead. And I'm going to take ourselves out from the sponsor side into the LP side. So how do you analyze the deal team? So as you take a look at it, each of these sections, acquisition, equity, debt, and asset management, what I would say, put a name by the person as a lead. Oftentimes we'll talk about, hey, me and Trevor are sharing the responsibility, which is true. Sometimes we do, but ultimately there's one person responsible for it. It's a little bit tougher conversation, but it gives you a linearity of who manages that thing. Sometimes Trevor will be the person who is going to deliver the project, and I will dotted line report to Trevor. That means the entire team will report to Trevor to deliver the job. And if the project doesn't come about, it's Trevor. We all are supporting it, and vice versa. So as you underwrite the deal team, put a name on it, the person who underwrote it or who blessed the deal for us to get that contract, and the person who's taking the loan, the person who is in the equity, a person who's, it's not the team, it's the person. And then you get to see how that happens. Because for us, whoever's running the asset, that individual is the holy grail of everything. That individual will be responsible for 5 years, and everything is betting on that individual, right? So that's our way of looking at the world. So as we get into asset management, so the question becomes here, what's the difference between an asset management versus property management? You get that a lot, right? Early on, everything gets stacked together. Sometimes property managers will do asset management and vice versa. But let's bring some clarity. Once we get into larger asset, let's say $10 million or $7 million or more, that's where it seems to be, 70, 80, 90 units. Asset manager has to behave differently than a property manager. That going up and down is tough. Not all the property managers become asset manager, versus asset managers should not be property manager. They have different roles. It is important because as someone is growing, they really need to be more and more asset manager, right? Asset manager has a long-term view. They do different things. They manage the property management companies and or the property managers, and property manager's job is do the day-to-day. We forgot last 3 years that a property manager is not the asset manager. An asset manager is not the property manager. And just following up a phone call, asking for update doesn't really help because you gotta take the team through it, right? So let's show some difference. On the right is a property management company or property manager. They do from day to day to month, and that's where they typically stop. And then we have leasing agents, maintenance crew, then the booking agents. Those are all property management company, and then their sole job is to get people through the door and collect the rent and run that cycle at all time, which is rental incomes and everything. Now, there could be someone between AM and PM, which is a regional manager. So it is important for us to have a regional manager. So for massive side, if you go into a city, we try to build our way of to get 350 units. To have a 350 units, you get a dedicated regional. And the regional will add a layer between the asset management and the property management and help you out. And the expectation is a regional manager goes to property at least once in 2 weeks. So property management company is there. We're talking to property managers once a week. Regional manager goes every 2 weeks. We go every 3 or 4 weeks. There's always the ownership process. And that's how we operate, right? On the left-hand side is the asset management. They look at the whole process. They're like a CFO or CEO of the company. They're talking to lenders, they're talking to investors, they're coordinating with the CapEx team, they're coordinating with the property management team, they're hiring and firing, and they're looking at the cash, and they're guiding the property management company and the asset through the ups and downs. So their job is to provide the overarching view of the assets, right? And this becomes really critical when you have 2, 3, 4, 5 deals. It becomes extremely critical, right? That's why it is important when someone grows, when a team grows, what happens to the back office, how the data coming in, how they're managing 5, 10, 20 P&Ls. And ideally, asset manager should run independently than a property management company. An asset and PM, they should run in parallel, not in series, so they can have an oversight to it. And I'll show you how it plays out. All right, so on the corporate side, at the sponsor level, right? This is a high level, it's different color coding. I like the slide, but I'll talk you through as you go through. Let's go from left to right, then we'll talk about the color coding. So at the sponsor level, let's assume a sponsor has $50 million deals, got 3 or 4 deals going on. What the ideal corporate structure should look like, if that'll be a $50 million company, right? Book value $50 million, they're collecting $1 million of rent. Someone needs to sit down, run the long-term strategic plan, which is like your pro forma that we used to buy. And then we bring the annual budget. Within the pro forma, they should have a 12-month budget. 12 months budget gets tested with the forecasting. We call it latest estimate, right? So let's say we came into this year with a budget. We had a strategy, pro forma, but then we reset, we updated the pro forma based on what we understand about the asset, power asset with the budget. Then we have 4 quarters. Every quarter we update that. So quarterly forecast. So this is month number 4. So we took the budget, we replaced the first 3 months with actuals. Then we say, hey, if our goal is to get $120 a year, and I am at a month number 4, first 3 months I collected $10 a month, I'm at pace, no problem. If I'm high or low, then I have to change my pace as you go. So that's there. Then you got reporting. This is like a cottage industry by itself. Then you have the whole master data, how data is coming in, how data is going out, and that kind of stuff. Then you have the technology. So Massive is a relatively new company. We're 2 years into it, but we built a structure based on that. When we came about, we said we're going to do multiple deals, and multiple deal will be at a different phase in life. And we're going to have multiple property management companies. So we'll have multiple people giving us the data from multiple softwares or property management companies like Entrata, ResMan, OnePage. How do we do about it, right? So that's how we built it. Here, the color codings is the, dark blue is the high automated potential. And then the light blue is the medium automated potential. And the light one is the low automated potential. So that's which is the version of that is right. And again, I'll go through quite quick, then I'll close that back to the multifamily, the corporate versus multifamily and the gap and how we go about it and how you should take a look at it, at least a version of it when you analyze the deal team, when you analyze the project and you get the reports, right? Full disclaimer, we had our fair share of learnings and mistakes and we're evolving as we go. It wasn't, we didn't get here right away. It took us a lot of grunt work to get to this point, right? So when you look at a new team, look at the point of grace as well, give them some time as they come through. All right, so what happens at the asset level? Typically at the asset level, at the week 1, we should have at least the initial report of cash collection. Day 5, usually you know how much cash you have collected. Then we start working on the month-end close, accounting reviews, month-end reporting start, and quarterly report starts. Now, this 5 and 4 doesn't happen unless you are fully automated. Maybe your big shop will happen. On the smaller ones, sub 200 million, 300 million, it doesn't quite happen right away. But accounting review begins, month-end close happens at the day 10 for us, but the flash report, the cash, we already know in day 5 what happens, unless it's a Monday or Tuesday. Week 2, the finance update's already done. Review forecast starts with the business and the property management companies. And so all the reports go out from the property management company to the sponsor team on a week 2. Right. So week 1, property management company reconciling everything, and sponsor team knows how much cash we collected. That has an impact to the rest of the month. Week 2, they're closing the book. They're saying, I'm done. Accounting has reconciled, has been cooked and baked, and it's all good to go. Week 3, that's where you start reporting out. The sponsor team will manage the working capital. If you have a special projects, we'll take a look at it. We'll take a look at the CapEx. At this point in time, I'll come back to that. But look at number 6, the investor reports. Typically on a week 3, investor reports will be going out. That's what we try to follow. So that has been our model. Yes, we failed to do a bunch of times, but we are striving to this model. Week 1, first report. Week 2, workday 10, we close the books. Workday 15, reports come to us. Workday 20, we want to push out the investor relations as we go. And from the massive investors, we started 4 or 5 different formats. We are moving up to 1 format now. We have David Foran on the call. He's our portfolio asset manager. David, thank you for doing all the work that you do. We have 2 other finance team reports to him, but he is reconciling the standard template, standard model as we kind of go about it. And the week 4, again, we look at the revenue and account payable, account receivable, risk and opportunities. So that's at the asset level for us sponsors and you investors. Now, at the property level, we changed the style. Week 1, it's like coming in. So this is April 24th. So this week, all we're going to talk about next month, what's going to happen. That's the part of the property management or asset manager's role, because I don't have much of a time. I have only 30 days. So last week of the month, we start looking ahead next month. So week 1, it's all about making sure I'm on pace. Week 2, I am looking for concerns and comments so I can change my course or speed or whatever I have to do. Week 3, I'm already done. There's nothing I can do to change what happens within that month, except all the bills I gotta pay. So we get to decide, do we preserve the cost in week 4 or do we kick it over to that? So cash management becomes a conversation. So we start the month-end conversation or 4-month conversation week before. Then week 1, it's all about maximization. Week 2, optimization. Week 3, damage minimization. Week 4, you're done. So that's how we kind of operate our assets. All right, so let's go to the next slide. And now, so what's the framework that we do? So again, to recap our framework, we love frameworks. It puts everything on a structure. We have a business plan. We have a team. We have performance. Everything that we do on the performance is we are measuring it continuously at all time. We're trying to create an equation so we can measure our performance and we can optimize as we go. So today we're going to talk about this asset management right here on the operation side here, and only 1 bucket. So operation is a big deal. It's a lot of things we can do. We'll talk about only 1 item today, which is the revenue management, right? So I had some rights on that thing. It's called revenue management. What we try to do, we try to build an equation. 1, then a 2, then a 3, then a 4, then something happens. And let's run that equation till it fails. If it breaks, we figure out where the equation is failing. So we map everything out. So for us, multifamily, it's a revenue game. We have to be cost efficient, but it's the revenue game. If the pro forma doesn't underwrite on the revenue, we are in a world of pain. So everything starts on the revenue, and that's our model bias and everything else. So when a broker says cut the cost, cut the tax, and cut the insurance company, you'll be profitable, our reply is, hey, that's between you and feds. I'm not getting into the state. That's not my cup of tea. We're going to underwrite the way I see it. If it doesn't pan out, let's be it. We'll move on to the next one. So for us, it's a marketing from the revenue side, and I'll walk you through how that matters. And it starts with source of leads and ends with assigned leads. and data management. And the last one is the process operations. One thing is what we say, yes, I could come from a corporate world. I could run a P&L, but that is different than I'm running that in a multifamily. There's a domain expertise, there's a domain knowledge. And on a large organization, we have tens of people reporting to us. Tools and systems are there. But in the multifamily, we may not have it, especially when you have multiple properties and using 2, 3, 4 different types of property management company, it becomes complicated. So pay attention to what we say and how we say about it. And last thing is whatever KPI that we have, it needs to be actionable. I measure something, and that means I need to be able to do something with it. Otherwise, I shouldn't take a look at it, right? So we look for independent variables as you go. All right, so it's for us, it's a revenue. I'll walk you through the model, then I'll do an exercise. So it's a revenue. And revenue, we think about revenue, occupancy, collection, add-ons, which is what's my occupancy, what's my cash collection, and what is my miscellaneous other income. That equates to the revenue. I know then second one on the occupancy, it's new lease and renewal. That's what I do, right? My renewal and my new lease is that. Still, if I talk about what is my new lease coming up, and what is my renewal coming out to a property management company, and they're going to tell me whatever they tell me, but I cannot drive an action for them. I can call them 10 times a day by saying that, hey, how many new leads coming up? But at some point I'll become annoying, right? So as you look into KPIs, you need to go to the independent variables as much as you can, so you can dial up or dial down that particular action, then give you that, right? So on the collection side is operations and communication. I'll break it down a little more. Same for the add-on is the operations and the community. So let's look at the occupancy. New lease, it's my lead gen as my operation. Outside the house, inside the house. Renewal is my operation and communication. If I step down one more time, the lead gen, it all depends on what's my acquisition cost and how do I spend that money to acquire a customer. Operations means once somebody applies in my submits the form, how quickly I'm getting to them, how strong I am to do the closing. That's going to depend on do I have a process and how many FTE, full-time employees I have. Same thing for renewal. Operations, if I have 400, 500 units, I'm collecting. I'm like a cash collection business. I'm collecting. If I don't have a process that builds up a reminder, an email, a text, cash collection, and if I don't have enough FTEs, then it's a tough one. Also, renewal, it has a component to communication. It's the frequency and the vehicle. That means how often I am in front of my tenants and how I'm being in front of them. Do I put a letter on the door? Do I send an email? Do I do a text? Do I drop a ringless voicemail? And that's going to boil down to a culture. So if you think about it, you got to build a culture to get to be in front of them so I can communicate effectively, so I can increase my renewal rate. That's like half of the battle. If I don't have enough people in process, my operation sucks. Even though I have a great communication, my renewal rate still doesn't go. If there's no culture, if the tenant doesn't feel like it's a nice place to be, people are there, they listen to you, at least they react to when you say it, we're not gonna be able to get the renewal, right? And same for lease and the whole bunch of stuff. I left it for you guys. You can take a look at it. And on the add-on, it is interesting what we do. The miscellaneous income that we can do has a lot to do with operations, same as process FTE, but it also has a lot to do with the community and the culture. So on the renewal culture shows up on the community culture. And the way we build community, we do events and reviews. On the events, we have a yearly schedule. Trade hamburger for reviews, trade hot dog for reviews, make them feel good. And if they feel good, if I have the right process, I can get good reviews. Good reviews means they're giving me indication of staying. Maybe I can charge them a little bit more. Maybe my renewal rate will go. So on the left-hand side, we started with just the revenue. But on the right-hand side, I got to build a culture. I got to have a process. I got to have enough people. I got to have enough training. I got to know the cost of it. I need to have a yearly schedule and that. Some property management company barely would have it. The big ones will have it. Some will not. Now, if us as an asset manager, if we cannot understand the whole map and we use that as a yearly basis, then how are we going to drive a conversation with the property management company to get the expected result that we have, right? So that's that. And then I have about 10 more minutes. What I'll do an exercise, a demo. So get your pen and paper ready. Then we'll do a quick demo. Hold on, let me pull that out. Okay. All right, this is live data that I'm going to use, and please take with a grain of the salt. So we have our own software that sits on top of all the property management companies that we have, and we aggregate more portfolio. This is a full disclaimer, not all the data is correct here. I changed the data a little bit, so nobody holds me responsible. Full disclaimer, and then I will talk you guys through. So what it does, we have ResMan, Entrata, AppFolio, and also one page. What we do, we download a whole bunch of reports, then we mix and match it up, and then we cut the data the way we want to see it. And that we do it every Monday. So when we come to the property management call, we are ready as the asset manager. That means our role is to understand what the property management companies are doing without talking to them, at least 60 to 70% of it. Same thing, if we go partner with CodeGP with somebody, they will tell their story. But when we come in, we look at this as well. And also we could share the information with the other sponsor team or our co-sponsors by helping them guide the conversation. And this was our platform of all the assets that we don't perform, that we had to go in and help, and also all the assets that we operate as well. So this is McCollum in Dallas area. We've got 417 units. We started the year at $1.51. Right now we're at $1.61. It gives me all the cuts of the data. I can go take a look at it. I know what my unit count, what the square footage, all this counts this way. So that's the first thing. It's a standard cut across the portfolio. I can take a look, different assets, where they at. Amberwood, it's in the Dallas area, $1.22. Creekside, it's in Colorado, $1.27. Macon this, and then Pasadena here, $1.16. The Fate, Warner Robins, and Watershed. So this is our dashboard that we use where we aggregate the portfolio and independent tool software. And now we're doing a coded projects to do an API so we can bring the data without doing an error. All right, so let's do an exercise. So we're going to talk about today McCollum. And the question is, we're going to go back and put our asset management hat on. And we say, hey, we're end of the April. We got May coming up. So how we are going to calculate the target vacancy that we're solving for next month. And then we're going to drive in what's my action, right? So that's us. And that's the exercise that we're going to do. This session is going to be quick, but you can ask me a question. I'll answer as you go through. That's not a problem, right? So first thing first, I know my rent. I'm happy. I'm getting some spread between those two units. I'm happy, and I know my relative positioning compared to the other two properties that I have. So I know it now. I'm going to go in. First thing we're going to ask the rent roll table right here. What we have McCollum. So I changed the number here 417 to 47 just because. So this dashboard, what it does, it tells me how many occupied, non-occupied units that I have here, and gives me a ratio here. So the business plan that we started, that we talked about here. Oh, where is this? Right here, the business plan, the annual budget. So annual budget calls for 92% occupancy. I'm at 80%. So I have 4% spread. That means next month, I not only have to do what I have to do every month, plus more to get 4%, right? So first thing first, we have roughly 60 units vacant right here. So that's one, right? So coming in, So I'm missing 10, so 49 plus 10, 59 assets. So let's say 59 assets, it's empty right now. There's nobody in there. And then I have here 27 assets, notice unrented. So I have a 60% retention rate. Last year it was, last quarter it was about 52, 53%. And we moved it up to a little over 60%. So our culture got better, reviews got better. I'm seeing a higher retention. So let's assume I have 27 units, they are month to month. So they're going to walk away next month. So 40% of that, right? So 40% of that is going to walk away on top of the 50 units that I have. So I am solving for that, right? So that's one. And then we come about here, this is my expiration date. I'm looking at month of May. So again, going into the May, I have, 60 vacant plus 40%, another 8, that's 68 roughly. And then I have 60% retention, about 40% of the 25 will go away. So now as the asset manager, I could say, hey, before I talk to the property management company, I did some back of the envelope calculation. I have roughly 60 plus 8 and another 8, roughly, let's say 76 units will be vacant. So again, we're doing analysis as you kind of go through. Now the question is, from the 76 absolute unit, how many I have to do at every month, and what's my incremental? Now take a look at it this way. I have 12% vacant, right? So I got to do 4%. So the 4% of 400 units is roughly 16 units. So that means no matter what I do, I not only have to perform at the March level, but also I have to bring in 16 extra leases as you kind of go through. So we got the calculation, right? Now the question becomes, how do I get the leases? What do I do? Do I just call them and tell them what you are doing, or what exactly do we do? So then we come back to this data. It's called lead to lease conversion data. We bring in every single leads that come into the system, and then every single lease that happened that month. Now, if the property management company says, hey, your number is wrong, then our question, did you put the number into the system? If you haven't, don't tell me, because this is my view of the world, right? So this is my column. 2022 doesn't matter. It's some wrong data set because that's the asset we kind of took over. 23 and 24 matter. So our first pass is we take a look. This is our step-by-step equation. How many leads coming through the door? How many application happened or property tour happened? And how many application was signed in? How many were approved? How many was leased? So I have a step-by-step process flow, right? And that way I could tell if I have 4,100 application coming in, 1,000, coming up. It's a lot. I almost have 100. 100 divided by 4, I got 25 tours every single week. Do I have enough people in my operation team to have it? Is it the people issue or the timing issue, right? And to schedule to get 10 people, 25 people through the door every single day, every single week, how many times I got to call them to remind them? So this is your process check. So 2023, I did a quick calculation. Every lease, we needed 22 leads. We did a lot of house cleaning and process and operations and timing speed. So we speed up, we trained. And now this year, we are leaning towards about 20 leads and 1 leases. So we got improved by 10%, which is okay, because 10% improvement when market goes down, it's like a huge improvement, right? So year to year, 10% improvement. And then on top of that, the whole pocket went down on the performance, but our McCollum asset is the best. Our property looks the best. Our process is the cleanest. We get the most amount of lead, and then we're still behind by 14, right? So the question becomes, where do we go and get some more leads, right? Then we drill it down here and try to understand what time of the month I get more leads. Is it week 2? Is it week 3? Is it week 4? What it is, right? So we map it out. And then from there, we drill it down which days this happened. Then we drill it down exactly where my source of leads coming from. So instead of going back and telling the property management company, hey, look, I am 4% behind, I need to have 16 more, we can drive the action all the way down to, hey, we need to spend more money into apartments.com, or go to Zillow, or go to Facebook, dial up, dial down, because not only I need to get, not only I need to get, let me see, 265 leads, plus I need to get more. April data hasn't come in yet, so don't worry about April data. March data, so not only I have to get 380 leads, on top of that, I need 16 extra, and 20 leads, 1 lease. So I need another 300. It's not theoretically possible, so we do incremental changes, and we update the pro forma as you go. So that's how we look at it. And now if you ask me the question, what happens to the Stonewall, wise, all this kind of other stuff, McCollum, I'm gonna close the conversation. Cash collection perspective, we are ahead of the pro forma. We are fine because our cash collection, revenue collection is really good. We bumped up the rent a little bit. So our cash collection is good, even though we are occupancy target, we are behind, but we are not letting the guard down. We're going like a line by line by line, and then each of the sources and exactly who's going to do it and not, right? Then we calculate, going back, what is my cost of acquisition of per lead, and then we spend the money on the marketing to get the leads out of the way. That was a lot. So I appreciate you guys listening in, and hopefully you guys appreciate, at least in the back of the envelope, some of the work that happens. Now we have 1,400 units. It becomes really convoluted and big and messy. So we try to structure it. And that's a part of the thing that we talk about at the Massive Masters, right? You need to bring the corporate structure if you want to grow. It's not a part-time side hustle, one into apartments. It's a full-time, fully structured data, and so you can drive conversation as you go. And that way, it doesn't have to be Shariah's way or Mike's way or David's way. It becomes easily transferable. Anybody can come in and spend some time and drive a actionable items down the way. So that's how the Massive happens. And I got a note last time what the Massive does. Massive Masters, we do 5 things. We have a community. We share data. We have hundreds of meetings every year. It's a totally hands-on work. Less of a YouTube University, more of a let's get to the work and show on the other side. We do a lot of training and education. We are academic. We want to be close to the academia and bring in as much as we can. And then we have lots of tools and tactics. If we would not know how to market, we would not be able to drive this conversation. And it is tough for someone to come in off some different background and get to that speed right away. So we come in and give you guys the bridge so you can walk on our shoulders. So all of our partnerships get the access of our finance team, get the access of our marketing team, and our investor relations team. We do lots of events. We meet people that way. And also we got the perks. We got the CRM and the marketing process and everything else. So our methodology is that old school way of saying, go network with a broker, a lender, and build a relationship. For us, once you come to Massive Masters, you don't have to build a relationship. We already built it for you, and you go around on our shoulder. And that way you get less of a noisy deal and you can get to it. Deal flow, don't have to worry about it. We got room full of deals, go underwrite that. Software, don't have to worry about it. Come take ours, right? So it accelerates the journey as you kind of go through. So, all right, Trevor, back to you, buddy. There was a lot, so.
There was a lot. That was deep. That was deep. So whose head is spinning? I think everybody's head is spinning. So I think from really what I want to say is the most important thing is most of the time people are looking backwards. They wait for the month to end. They get the report. It's not even finalized almost till the 3rd week. So in theory, you are already 7 weeks behind and you're looking at the data. You cannot manage and do that, right? You have to look forward to make your plan. And then if you don't have all of the pieces right, if you spend a whole pile of money on marketing, but you don't have anybody in the office answering the telephone, if they come to the place and there's trash all over the place, they talk to some tenant and they say, and I've been there, I've done a lot of property tours in my life, don't move here, because I always never say I'm buying the property, I'm just checking out the property. How many people have done a property tour and somebody said, don't move here, right? It happens all the time. You do not want to be that place. You want to be that place where someone says, man, it's a very responsive place. I mean, nobody wants to pay rent, right? Nobody's always happy. But if you create a place where people feel I'm coming home, I'm coming to a place where people listen to me, care about me, try to provide a safe environment for my family to live. That's the goal for all of us that are buying communities to make them better. So anybody got any questions? I know that was a lot of data.
I would add on to what Trevor was just saying. Very much about you don't want to be that property, but you might want to buy that property. It's you don't want to buy a distressed. There's distressed properties where the property itself is distressed, and you have distressed properties where it's the business operations of the property that are distressed. And when you have an organization like Massive that I like to think we have our act together most of the time, you know, we can Strier's laughing. You know, we you know, you can get a really good deal to find a nice property that's well maintained, but isn't run the way it should be run. And at the end of the day, you know, it's a lot more than just bricks and granite and stainless steel. It's a business, and it has to be run like a business. And all of the things that, you know, that's where the rubber meets the road, because there's a lot of people put their, they'll look at their underwriting and they'll say, hey, this is a great deal, and they'll buy the property, and if you don't have the right asset managers, you don't have the right property managers, have the right people in place, looking at the right metrics, you're not going to run it any better than the last guy who went broke selling it to you for a good deal. So it really, really is important at the end of the day, to be able to deliver the value that we're promising investors. We buy properties that aren't running well, and we've got weeks and months and years to get them turned around and running like clockwork. And the idea is that's the time to sell it at some point down the road. But yeah, in regard to those property tours, we've I've seen opposite ends of that extreme. I've seen properties like our McCullum property that I'm super proud of. We've got you go there and the crystal clear pools, and you've got a community of, you see people there kind of engaged and playing games in the courtyard, and the kids are running around. There's a sense that they're safe to be running around. And I've seen properties where even though they have laundry facilities on site, they're walking across the street to the laundromat across the street because there's homeless people sleeping on the floor in the ones on site. And so, at the very basic is safety and security, and going up from there, to providing community and all of it. But yeah, that was all of the metrics that Schreier went through. That's the stuff that I look at every day.
Yeah.
So yeah,
So there is a question in the chat about virtual assistants, and we definitely use virtual assistants. We use a lot of them, but most of them are in the very much in the background. They're the ones that are running our Facebook Marketplace ads. They're the ones that are doing the things. So we do use a lot. And we've started now even using, maybe you want to talk about the texting and some of the other AI things that we've started.
Thank you. So, couple of clarification. The conventional way will be find a low-cost country and a low-cost skill set, and you do that. So we follow that model, but not that model. What I meant to say, yes, we have 3 different teams, 3 different skill sets in 3 different countries, and everybody who comes into the group, they're one of the better ones, stronger performer in the community. What I say it, we have 3 people in the finance now outside the US, 1 coming up new and 2 existing right now. The person who runs the finance manager from India, from Chennai, he used to work with me at Shell, been at the Shell Fortune 10, for almost 6 years. Then he left Shell, became an expat, went to Dubai. Then we brought him back to India, and he's working with us. So he's a solid finance FP&A guy. He's been there, done that, just like you. And in the US, no shortage of caliber. Another person came in that reports to him. She's a chartered accountant. Went to the process of India. She's a CA. She worked for 4 or 5 years, and then she went, became a mom, and she's coming back and to join us. The same version, whoever comes in, we have an expectation that you got to come from Fortune 50 as a consulting company, at least 5 to 10 years of experience. Then you can come in, even though you're outside the US, and that's how we come in. So they are as good as us, if not stronger than us, happen to be outside the US. Not a typical VA that we kind of tend to think about. Same our marketing company, they all graduated. The marketing lead that we have 3, 4 now. The highly educated, the marketing manager, she's in different countries. She went to UK for study, then she went back, and she brings in that kind of a background. And then on the tech side, is a similar version. There are 2 engineers that we hired. They are like the MIT version of that country, and they come in and back us. So we don't go cheap on the quality of the people, even though they're outside the US. Cool.
Any other questions?
Then I would love to think so all the time, but hey, we have our fair share of scars, right? At least we're trying. I'm not gonna lie to you, but we're trying, and we're trying our level best to get to, as much as we can, and provide a culture or at least expectation what you guys should have, right? So my biggest, the the way we remind ourselves, look, I would not buy a stock of a company where I have a part-time CEO. I think I got 10 other side hustles. You wouldn't, I wouldn't. But how would we flip that in the multifamily sector and we go about it? And that has been the biggest silver lining of majority of the asset issue that we see day in, day out. And just be critical about it. Sometimes we forget, we get the FOMO, it happened, it's okay, but let's go back and reset the note as you kind of come about it. So Trevor,
We
is
have
that
one
okay?
question here. I'm
One
gonna
question,
butcher
what is
the
that?
first name. I can get the last name, John, but I'm afraid to pronounce the first one. Go ahead.
Hey, Trevor, hi, thanks for
Good
your,
to see you.
yeah, good to see you too. Thanks for the webinar. I want to ask a question. I'm currently nearing to, can you guys hear me?
Yes.
Okay. Currently new into this space. We get another knowledge. Met Michael Montamare at the conference, so I kind of know a little bit about Massive Capital. But at the moment, I currently have some deals I've been looking at trying doing underwriting, and I wanted to ask if it's something I can present to Massive Capital and they can come in as a co-sponsor GP on the deal. Is that something Massive Capital works on, and is that opportunity open? So that's my question.
Short answer is yes. And long answer is we're going to do a lot of practice together before we get on a project together, right? So John, I don't want to say the name wrong. Or before I get to John, which name do you go by? Say it, so I'll practice it.
Yeah, John.
John, okay, cool.
John,
So John, yes, we co-sponsor deals for the new partners as well who are coming and joining in, and with an asterisk on the side. For us, it takes about 2.5, 3 months to build a new relationship. And our philosophy has been, we want to practice first, shoot some shots first, simulate a game. And then if we think we're a good match, let's go play the game, right? Which is why if someone puts a property under LOI, then gives us a call and we don't know, it's too late for us. So John, if we want to partner, let's start bringing the deal, let's do underwriting, because interesting part is with the lens of how you underwrite, how we underwrite, we could see if it can work or we cannot, right? Because underwriting is, we make assumptions. The assumption based on how we see the world, based on what's my expectation, based on my time availability. So a lot of things that kind of boiled in. So long way of saying, yes, absolutely, we're open. And the practice time is before you put a property under contract, and let's go practice early on. So it takes about 2.5, 3 months as well, keep on practicing. So underwriting together, it's first step of working together. Not LOI, give me a call, then we kind of go about it, right? Unless we have seen each other before, we have worked with each other before, we know the nature and the culture and the longevity, then does it make sense?
Yeah, it makes sense. Thanks for sharing.
And I did put a link in the chat where deals could be submitted, but again, don't send us something that's on market. We already saw it. There needs to be a reason with some things, right? We underwrote so far. We're getting close to 1,000 deals. We're over 950, I think, right now in the last while. So we're looking at a lot of deals. So if it's on market in an area we're looking at, we've probably seen it. But if you have something special, and again, we would only do deals outside of markets where we're already doing deals with an experienced team. Because we want to make sure the asset management's done right, and it's a lot of work to manage somebody else as well.
Yeah, makes sense.
Come to May 18th, it's gonna be fun.
Yeah, it makes sense. My buy box is Texas, so currently I have 1 or 2 off market deals that I'm currently working on the store.
Yeah.
Yeah.
Awesome.